So you click into this video wanting to know the answer, right? Let me give it to you straight. Nothing. I repeat, absolutely nothing. Spare me with your explanations on value signaling, etc. Charlie is a classic value investor, and I believe many of you who pray to him daily knows of his specific investment style. The value signal already came in Q1 of 2021 when he decided to start a position in Alibaba. It's only the retail investors that are constantly trying to re-evaluate their position day after day, overthinking into the decisions, and most importantly, start doubting it when the price moves against your own expectations. Of course, I'm not saying that all these legendary investors will not make a mistake, but I'm sure that before they even started their positions, the amount of due diligence behind their decisions will be incomprehensible, at least for the layman like me. And here we are, debating on whether we can still even trust the VIE structure or not. Oh well, the double down on the Alibaba position via DJC is just a classic value investor's reaction when the dip just keeps dipping. You know what else is a classic reaction? You smashing the like button, of course. So please don't hesitate to react and make that like button turn blue. Anyway, I would just like to emphasize that even though Charlie did give his stamp of approval on Alibaba by doubling down the position again, it actually doesn't mean much from Charlie Munger's perspective, just based on the sheer impact it has on his own personal portfolio. So let's take a step back and look at what constitutes Charlie's current net worth and make our own propositions accordingly. So the following numbers are extracted from Capital IQ, so I don't bear any forms of responsibility if there are significant inaccuracies, but I highly doubt so because Cap IQ is pretty well known in this space anyway. But before we look into his actual holdings, you can just do a very quick Google search on Charlie Munger's actual net worth. And on many nosy sites, they work out to be around $2.2 to $2.3 billion. So based on Cap IQ, a significant portion of his wealth is tied in Berkshire Hathaway, alongside his best buddy, which is Warren Buffett, of course. So based on the rough estimates, it's worth near 95% of his current wealth. So the remaining 5% is split amongst his positions in Costco and the Daily Journal Corporation. So let's not forget, he purchased Alibaba via DJC, where it represents less than 1% of his entire net worth. So he definitely remains bullish on Alibaba, but you can also make the argument that, hey, he's already 98, and the investment in Alibaba does not have a material impact on him. So he might not feel it, and he's just essentially fooling around with investors' money. That said though, both Charlie Munger and Warren Buffett are goats for a reason. I'm quite sure he walked into this decision knowing the relevant risk-reward for shareholders, and more importantly, he's the financial steward of DJC, and he's not buying into Alibaba just because. Objectively speaking though, if Alibaba were to go to zero tomorrow, it probably wouldn't hurt him much. Which begs the question, especially for investors who followed Charlie Munger into this trade. If you guys really have immense amount of respect for him and his own particular investment style and wish to clone his position, essentially try to imitate him, we definitely have a clear winner. You should go for Berkshire Hathaway instead, since he has essentially about 2 out of 2.3 billion in there. So for people that have copied Charlie into this investment, you might want to evaluate your position again and see if you come in for the right reasons or not. And of course, don't regret it later when Alibaba dips below $100. So I also took the liberty to compile the highest and lowest possible prices DJC could have entered into their Alibaba position during 2021. Another disclaimer, the prices might not be extremely accurate because it was done manually, but it should have a rather small deviation. So if you were to do a quick comparison over these 3 different scenarios, what is your current cost position for Alibaba? You can leave in the comment section down below, and you can of course compare it to the averages. So just based on a very simple average, the current cost of their Alibaba position would probably be $182 per share. But I would believe that their cost would be lower in the $150 to $160 range instead, just based on my own understanding and how they would not have probably bought it in the high 250s. Anyway, in the name of transparency, my cost is currently also hovering at around the $150 to $160 range. So I evidently didn't manage to catch all the bottoms. Funny thing though, I think there was this comment stating that, hey, a Munger can keep doubling down because he has deep pockets. And if we don't, we should still be sad because we are all still having a deep rate position with Alibaba. So the interesting thing is, I don't think it really matters how deep your pocket is. It just depends on how you size your position and tranches, isn't it? Even if, let's say, you hold a portfolio of $10,000, $100,000, $1 million, or even $10 million, You have to just size it based on the percentage in line with your specific strategy. That said, if you have been buying throughout 2021 and achieved an average price above $182 based on your own calculation, you might want to revisit how you did the purchases and calibrate accordingly. I mean, I'm not here to teach you when to buy a stock, but you should know it best yourself. On top of that, because most of the viewers here are 25 and above, I'm pretty sure most of you have passive or active income. The problem then lies on whether you have been averaging down or just holding, isn't it? Some might just say that, hey, you have already hit your cap in terms of a percentage of your portfolio, for example. But if you have been adding funds into your entire portfolio consistently, month in, month out, your Alibaba position size should also grow alongside, right? Unless it's an absolute amount you are willing to lose. If that's the case, maybe the rate of buying has been too fast. I don't know, you have to do your own analysis. But the biggest problem would still be,
I want, no I don't want, okay, a little.
So anyhow, I just wanted to end off this video by briefly outlining my own understanding of investing. So to me, it's just 4 simple principles to follow. Number 1, circle of competence. Understanding what you know, understanding what you don't know, what jargons and industries you are comfortable operating in, and understanding the enterprise model. And best of them all, if you can tap into your own unfair advantage, especially for all you engineers, scientists, professionals, who have much better insights in all these said industries compared to the rest of us as retail investors. Number 2, margin of safety. It's intuitive for us to always negotiate for a cheaper price. We bargain on clothes prices, we negotiate for property prices, but stocks are the only things in the world that people run away from when it's on a huge discount. So a huge margin of safety just provides you with more room for potential unknowns and errors along the way. Number 3, intellectual honesty. It ties very well into point number 2, because you have to always exercise independent thinking and not be swayed by other people. In order for you to have a margin of safety, you will first have to know of what the actual value of the business is worth, i.e., or some of you might call it intrinsic value. When creating a model, you need to be brutally honest with yourself when you input all the different assumptions into the model. Of course, I can assume Alibaba grow 50% year on year for the next 5 years. I'm going to get a crazy number and a sky-high valuation, but how accurate will that projection be? On top of that, be extremely critical on your own thoughts, because I know us as humans are very good at self-hallucinating, especially people with a very strong sense of logic. When you find yourself trying to justify bad outcomes and turning it into positive ones, also might mean that you are currently en route to self-hallucination, and essentially, in Chinese it's called 自欺欺人. Number 4, read voraciously and just freaking read. I think patience is extremely understated. I don't know about you, but these are just the main principles I follow when I try to pry into a company and evaluate whether it is an opportunity or not. I know many people have been flaming all the dumb Alibaba investors for catching the falling knife in 2021. They will pull out all sorts of technical charts telling you this and that, how they have predicted it all, and how this entire downtrend is just burning all you Alibaba investors. Have fun, bro. I hope that you have a more prosperous 2022. I believe everyone have their own sets of rules and philosophy they abide by, but I would just like to remind people to not get confused and overwhelmed along the way. It's good to have things to reference to, but when they start to conflict each other and you have so many choices and opportunities being laid out in front of you, what are you going to do about it? To end off this video, let's not forget that DJC bought in during the period where Alibaba was around 220 to 274. That's when Munger felt that a margin of safety was sufficient for his first tranche. And I believe that Munger is a rather principled man. I don't know about you. So I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye, and not be swayed by